Renounce or not to renounce? That is the question. Expatriation lawyer John Richardson has returned to For the Now to discuss renouncing US citizenship. John helps US persons living abroad to navigate their extraterritorial tax situation. On this podcast, he discusses what could be their next move in different financial circumstances. He does not promote renunciation, but understands that it is a very serious personal dilemma for US persons living abroad who fall under FACTA, the Foreign Account Compliance Taxation Act. Welcome back, John, to For the Now. So how are you today?
Well, I'm very well, thank you. And how are things in London?
They are good. Yes, we are out and about, which is just brilliant after being locked away for months. So how is it in the world of US citizenship taxation?
Well, it continues on unabated. At this very moment, the Senate Finance Committee is meeting to, they think they're talking about corporations, but really they'll affect many more individuals, particularly those abroad. So the long-term prognosis is not very good.
So I suppose the question is to renounce or not to renounce, isn't it? Renounce your citizenship. What do you reckon on that? Because you don't actually promote renouncing your citizenship, do you?
Well, I think renunciation is a personal decision. And no, I don't go out and, walk up and down the streets in Toronto or say, hey, buddy, are you a US citizen? Have you considered renunciation? That said, once people learn about the problems, they magically get the idea on their own that it might be a better life if they were not a US citizen. And they do think about renunciation, and certainly I, work hard to provide them with the right kind of education to make that decision.
But surely, as long as they're filling in their forms like good people, then they're still living the American dream, aren't they?
Well, the problem is that the United States has basically two kinds of tax systems for US citizens: those who live in the United States and those who do not live in the United States. And although all Americans have to fill out forms, that's largely what it means to be an American, is to fill out forms, report everything. As I've often said, report early, report often, report everything, and do keep a record of what you report. But the forms that are required of Americans abroad are far more punitive, far more penalty laden, absolutely incomprehensible, and often require professional help. So no, I don't think they're living the American dream. They're actually living the American nightmare.
Not the American way, then?
Well, forms are the American way. There's no question. But there's a difference between the forms that homeland Americans have to fill out and Americans abroad. I think that the US tax system, although it's largely dysfunctional, doesn't destroy the lives of people who live in the United States. Sooner or later, it will destroy the lives of people who live outside the United States, unless they, keep lawyers, accountants in their lives 24/7 and make sure that they don't do very much other than just have a 9-to-5 job.
What, for example, John, if, I wanted to go and marry an American, what would that be like for me?
Well, it depends where you were living. If you were, living in the United States, it would be probably not too much different from being married to somebody in the UK. But if you are thinking of marrying an American citizen outside the United States, you can very easily become caught up in this whole thing. Starting from the American you're marrying probably would start having to file married filing separately, which is a very punitive tax category. If you don't mind all aspects of your financial life that you share with your spouse being reported to the IRS, I suppose it's okay.
Well, even as a UK citizen, I'm not moving to America.
Well, here's the thing, okay? It is common for spouses to share various financial assets, including bank accounts and things like that. It's certainly not unheard of. And Basically, an American citizen living outside the United States is required to fill out special forms, declarations, reports on a wide range of activities in their lives, ranging from just mere bank accounts to brokerage accounts to, oh my God, and if an American citizen outside the United States were to set up their own business, very invasive forms regarding the business. And, to a large extent, I mean, I hate to put it this way, but Americans living outside the United States have been effectively disabled by the US tax rules. So if you want to marry an American outside the United States, in a very real sense, you are, buying into and accepting a life with somebody who is disabled from normal financial retirement planning.
That's crazy. I mean, there is a situation, isn't there? There is a case study that we've spoken about recently. And, this lady who lives in Canada and has, a teacher's pension and a mutual fund, doesn't she? Which comes to the value over $2 million.
She was anyway spending the world as a young person, traveling, and then married a Canadian and moved to Canada, where she's lived her adult life and had her career. But the key point is this, that once you hit the 2 million net worth mark, which is very easy to do if you've had, 50 years of having a house in the Toronto area and, 35 years of a teacher's pension in Canada. If you try to renounce US citizenship, you're going to be subject to their exit tax rules, meaning that you don't just pay the $2,350, but that they're going to want a percentage of your assets as well. If you can imagine, I mean, you do not leave the land of the free for free. There's no ifs, ands, and buts about it. And in this particular case, there's a difference between how the pension would be taxed and how, for example, the house would be taxed. In the case of the pension, if you can imagine, it's full distribution of a Canadian pension, not 1 cent of it earned in the United States on a final US tax return.
And she's married to a Canadian, isn't she?
She's married to a Canadian, and I would have to think that this would be not an attractive situation for her Canadian spouse, given that that marriage is a partnership. In her case, and in similar cases, one can, rearrange the ownership of assets through gifting and that sort of thing to ensure that she would be below the 2 million mark. In this case, transfer her share of a jointly owned house to her husband, for example. This can be done. But I mean, why in the world should somebody have to, get rid of their house to be able to get rid of their US citizenship if they haven't lived in the US for 50 years?
What would you advise her to do? Do you think it's a good idea to renounce or not to renounce?
I think there's absolutely no question that she should renounce, because let's look at it this way. At the moment, she can get out of the US citizenship by getting her assets below the 2 million net worth thing. The reason that this becomes a heightened problem is that, I started to come to terms with this as a possibility, is that, sometimes people die. And so if she were to, if her Canadian spouse were to predecease her and she were to inherit his assets, which, is a normal thing, then her net worth would be very, very high, and she would not be able to renounce US citizenship anymore without definitely being subject to the exit tax regime. Now, you might ask, well, why would she want to renounce it at all? Well, the reason is that she's trying to behave responsibly in her investing and things like that. And, even things like non-US mutual funds are taxed very punitively in the United States. And then there's the fear of the issue of the estate tax. At the moment, it's 11 million US dollars, but it's clearly coming way down. First of all, it would automatically come down to half that in the year 2026, but the new US administration, which is clearly on the tax warpath, is going to be lowering that for sure. So then we have a situation where she's conceivably subject to the U.S. estate tax rules. Now, the reason I say conceivably is that Canada is a country that does have an estate tax treaty with the United States. It's actually incorporated in the general tax treaty. So there's some mitigation of that. But let's imagine we're talking to somebody not in Canada, but in another country that does not have an estate tax treaty with the United States. And you can see where the problem lies.
So not an easy path forward for her. So you suggest that, in her situation, it would best to renounce. And, so would she have to pay an exit tax?
The goal is for her to be able to renounce without paying the exit tax. And there's really two ways generally that could be achieved. The first would be if her net worth were below 2 million US dollars. And that probably is achievable on the basis of being able to make a gift of her half of the house to her spouse. The other way that's achievable is if her net worth is over the $2 million, that even though she would be technically subject to exit taxes, she would not end up paying an exit tax because there's actually a $750,000 exemption on the first $750,000 of gains. But the problem here is that if we look at the pension versus capital property, the pension is taxed differently, and the pension is not subject to that $750,000 exclusion. So in her case, it's the fact of the pension that really heightens the need for her to get out of US citizenship.
So, there is some sort of relief, though, isn't there, now to do with taxes since sort of 2019?
Not in the case of somebody who's been filing US taxes and is in the US tax system. I think that you're probably referring to what's called the relief procedures for former citizens that were instituted in September of 2019. And that is really a set of rules. I think it was designed primarily for accidental Americans who have never filed a US tax return and simply want to be able to renounce and clean up their tax affairs, so to speak, so that they are not subject to the stigma of being what's called a covered expatriate, meaning a person who renounced and is subject to the exit tax and, is generally held in low regard because they haven't been compliant with US taxation.
So that would, bring us on to our other case study of, a guy who got a green card and returned to the Balkans, and he is now trying to renounce his US citizenship, isn't he? Is it worth him renouncing his US citizenship?
Well, that's a very interesting question because, if we look at our first hypothetical where we have somebody with a pension that not only who has a pension, but very clearly has a high risk of being a covered expatriate and subject to exit taxes and that sort of thing, that situation I think is fairly clear. Now, the second situation that's being hypothesized here, which is, a younger person who just happens to, move from the United States, probably not a high net worth person, certainly not one of these teachers' pensions, that people might have in some other country. I don't think there's any reason for the person to renounce US citizenship that is as compelling as your first example, as long as they're willing to live with, the requirement to file taxes. But the problem is this, that for those who do file the taxes, what they're really doing is agreeing to essentially being disabled from normal financial and retirement planning for life, right? As an American, there's too many things they just can't do because they'll be subject to, punitive reporting, punitive taxation, et cetera. Now, in the case of this person who, has lower income, lower assets, probably, I think, quite a bit younger, certainly not in retirement. Okay, the first example, I think I would go so far as to advise them to renounce US citizenship while they can. The second example, I don't know that I would advise them to renounce it. I certainly would educate them, on the consequences of keeping it. Many of those people will, though, renounce it because the regulatory regime, including the taxation and reporting, is perceived to be so complex and punitive that people are just scared to have anything to do with it. And I believe that in this particular example, the individual did make the decision to renounce US citizenship. And that's interesting because there's no tax liability whatsoever. There's no tax issue whatsoever. It's just the sheer terror of being subject to a regulatory regime that is so punitive and can't be understood without access to high-priced, accounting or legal help. To come into compliance is about a third of his annual income, if you can imagine.
Third of his annual income. So, as I said, he just ran for his life, really. So, we're trying to avoid some more form filling, by the sounds of things.
Well, it's more than that. To say these are forms, I think might create the image that this is an inconvenience. These are forms that cannot be understood. Okay, they can't be understood without professional help. And often you need professional help to even know whether, you really do meet the requirements to fill out the form or not. There's only one thing that can be understood in the Internal Revenue Code when it comes to these reporting requirements, and that is the penalty provision, normally starting at $10,000. So the way people understand this is, oh my God, I'm going to get a $10,000 penalty for not doing something when I can't even understand what I'm supposed to do. I think that accurately summarizes. And, a lot of people will just say, nope, not for me. I'm done. How do I exit this? How do I renounce it? It is clear to me that this person could retain US citizenship, at least for a while, without doing too much damage to themselves. But often they don't see it that way. They don't want to be, held hostage in a sense to, they see it as either being held hostage to the US government or being held hostage to fancy tax advisors, lawyers, and accountants. And, neither is a tolerable situation.
Absolutely. It just sounds like, it's all part of the American dream, really, doesn't it? Having fancy
Well,
lawyers.
Americans do dream of other forms. There's no question about it.
Yeah, definitely. So in his case, anyway, he shouldn't really worry too much about renouncing. John, what is the difference, though, between renouncing a citizenship and relinquishing it? There must be some cases where people actually relinquish their citizenship, don't they?
Well, absolutely. Well, first of all, there is only relinquishment. There is only relinquishment. I think I'll say it again. There is only relinquishment. I'll tell you why I think this distinction has been sort of trumped up on the blogs and that, but let's start with the law, which is always a good place to start. So there's a section in the Immigration and Nationality Act, for those listening, it's 349A, that talks about relinquishing US citizenship. And relinquishment is when you voluntarily perform something, you do something with the intention of relinquishing US citizenship. And interestingly, renunciation is one of those things, one of those ways that you can relinquish, right? So renunciation is a form of relinquishment. A second form of relinquishment would be if you were to naturalize as a citizen of another country, or voluntarily naturalize as a citizen of another country. Say an American moves to UK and becomes a British citizen with the intention of relinquishing US citizenship, then that would be a relinquishment of US citizenship. So the difference, though, the way people see the difference is that renunciation, you have to go into the embassy or the consulate and swear that, yes, I renounce my Americanness for all times and all purposes. But relinquishment or a non-renunciatory relinquishment would be where you would perform an expatriating act, like becoming a citizen of another country, outside the consulate itself. And by doing that, you cease to be a US citizen for nationality purposes. That said, that is not always determinative for tax purposes.
Right. So, so then would that not be seen as like a dual citizenship?
Would it be a dual citizenship if you became a citizen of another country?
Yeah.
Oh, absolutely. Absolutely. Yeah. Americans are, entitled to have dual citizenship if they want. There's a decision that came from the US Supreme Court in 1967, the Ephorium decision, that makes that very, very clear. And there are many US citizens who are dual citizens. And when it comes to renunciation, I mean, it's not a legal requirement, but I certainly would not advise somebody to renounce US citizenship unless they have another citizenship. There are people, I know people who have actually renounced, they'd rather have no citizenship than US citizenship. It's hard to believe.
Right.
But there are people out there like that.
So how do they get a passport then, John?
You know, that's a very interesting question. I don't know. I think that, they don't get a passport, or, for, one of the cases I'm thinking about very specifically, the person came to Canada, renounced US citizenship, but was a permanent, had the immigration status of Canada, being a permanent resident, and was therefore able to get Canadian citizenship after a period of time. So that was how it worked. Now this is going back, to the 70s. Actually, this particular example I'm talking about.
Right.
It is conceivable that the citizenship laws in Canada could have changed since then, but there's one example of how that worked.
Looking at another situation where you've got American citizens who do have dual citizenship. I mean, I know we've spoken about, retired professor with a high net worth. How would that work as far as the taxation is concerned?
How would that work from the point of view of renouncing US citizenship? Yeah, this is very interesting because a moment ago we talked about the possibility of having to pay an exit tax. Certain Americans who renounce have to pay an exit tax, but there's an interesting exception to that. And that's for people who were actually dual citizens from birth and who are living in their country of second citizenship. So an example that you're giving me here. So let's say we have a University of Toronto professor, which is an example I've often used, partly because as an example I know so much about. And this is a recipe for big trouble, because a University of Toronto professor might live in downtown Toronto, might have a house that's worth well over $1 million, and could easily have a pension worth well over $1 million. And if we add those two things together, clearly over the $2 million threshold, and therefore would normally be a covered expatriate if they renounce, and therefore subject to the very punitive provisions of the exit tax. But the exception is that if that professor had been a Canadian citizen from birth, as well as a US citizen from birth, and in our case had basically been living his life teaching at the University of Toronto, and had been complying with US taxes, interestingly, that person would not have to pay the exit tax. So there is a dual citizen from birth, and it's a little more complex than that, but listeners should know there is a dual citizen from birth exemption from the exit tax. Now let's compare that to the same university, or the University of Toronto professor with the office next door, who was not born as a dual citizen, but took out Canadian citizenship and now wants to renounce. Now that person was not a Canadian citizen from birth, and therefore that person would be subject to the exit tax rules. So it's absolutely unbelievable, because let's just assume for a minute, which I think would be true, is the first example got his Canadian citizenship because he was born to a Canadian citizen parent or parents. Okay, haven't been born in the United States, to Canadian citizen parent or parents, and that's what gives that person the free ride on the exit tax. But the other person was unfortunately born to US citizen parents.
Oh no.
And for that reason, that person gets hit with the exit tax. So not only in America do the circumstances of your birth often determine the outcome of your life, but in the area of expatriation, it's even worse. It's not the circumstances of your birth, it's the circumstances of your parents' birth that can determine the outcome of your life. And yes, one more example of it's the American way.
It is the American way. It also reminds me, being a UK citizen and not a US citizen, that our Prime Minister, Boris Johnson, was a US citizen as well. He had dual citizenship, didn't he?
Well, he had dual, at least all I know is what I read on that, but he had dual citizenship from birth because he was born to a British father in the United States. Now, what's interesting about that, and I'm just speculating here, but, his escapades with the IRS are well known. He sold his house and all of a sudden he should be paying US capital gains tax, blah, blah, blah. And eventually he renounced US citizenship. And a lot of people say, well, he paid the tax for political reasons. No, he did not do that. He paid the tax because that way he would have been compliant with his US taxes for 5 years, which is a prerequisite for being able to utilize the dual citizenship from birth exemption of the exit tax.
But he's also got a British daddy, hasn't he? So,
well, that's why he'd be a dual citizen from birth. So my guess is that that Boris Johnson was a beneficiary of that section of the Internal Revenue Code that allows people who are dual citizens from birth, provided they're compliant with their U.S. taxes for the 5 years leading up to the renunciation, to renounce and not be subject to the exit tax. I don't know anything about Boris Johnson, but my impression is that he's a wealthy man.
Probably worth a lot more than $2 million.
I suspect that is the case. Paying the capital gains tax on the sale of a house was a pittance compared to what the exit tax might have been, right?
Yeah, absolutely. So, he completely renounced his citizenship and he is refusing to live the American dream anymore. So,
No, he is living the American dream. The new American dream is being able to renounce US citizenship. In fact, in the last century, a US passport was one of the most coveted documents in the world. In this century, a US certificate of loss of nationality is one of the most coveted documents in the world.
Gosh, now that is a form to fill in, isn't it, really?
It is. And and that's what he's got. And obviously, very happily so. It's very, very unfortunate that the United States, through the evolution of its tax laws, has effectively created, a fiscal prison. You can't leave the United States without all kinds of problems. It's as though it's a fiscal prison with taxation being the warden.
It does seem the American way, as you've said. And unfortunately, it sort of changes, doesn't it, across the world, whatever country you're in terms of, what the tax treaty is between, say the UK and the US, Canada and the US. In terms of, for example, if you were in business in the UK, you might have a better chance of working a way forward because sometimes UK taxes are a lot higher than US taxes, aren't they?
Well, yeah, that is true. There's sort of a mirage out there that, where people sort of presume that taxes in other first world democracies are higher than the United States. I think that there are certain kinds of taxes that may be higher. It depends what you mean by taxes, perhaps income taxes, and that sort of stuff. But if you look at the totality of taxes in the United States, I doubt that that's actually true. The United States is a country that is fundamentally tax crazy. There's just, there can never be too much taxation. There can never be any bad new tax out there. The Americans do love their taxes. There's no doubt about it, and they love the complexity that comes with it. But what's interesting is that if you look at Americans abroad, yes, the kind of regulation, the kind of taxation that they're subject to, interestingly, depends very much on the country they live in. I'll give you one simple example. The United States has what are called totalization agreements with some countries, but not others. To put that in context, the United States has self-employment taxes. And this is a 15% tax on top, by the way, at the end. This is no small thing. And these go towards Social Security and that sort of thing. But if you live in a country that has a totalization agreement, then you're not going to be subject to those self-employment taxes. So, a relatively small number of countries, mostly for first world democracies, Canada, Britain, et cetera, Australia have totalization agreements. Israel does not. So if you look at a US citizen in Canada who's self-employed would not pay self-employment taxes, the US citizen in Israel would pay self-employment taxes. So, there's an example. Or, yesterday you asked me about, a person who was self-employed in the UK who was started out with something or other that qualified as a UK corporation, but somehow or other magically the accountant was able, by checking a box, I think you said, to make the corporation go away.
Yeah.
And this is not a treaty-based thing. This is right there in the Treasury regulations under the Internal Revenue Code, which actually, I kid you not, look at it, it's Treasury regulation under Section 7701. They actually go through country by country, about 80 countries, and they say, well, this corporation and this type of corporation in this country, you can use the checks, are what are called per se corporations, meaning there's no way out. And these types of, and other ones are not, sort of thing, right? So in Canada, for example, things are overwhelmingly per se corporations, meaning you can't check boxes. But in the UK, you can check boxes, right?
Yeah. We like checking boxes in the UK.
Absolutely. That's a perk, given to the UK and possibly Australia, but not Canada. Canadians are, they're perceived as not liking to check boxes.
That's a shame. That's a shame.
It really is. It really is.
You've got to be known for something, form filling, checking boxes. It's all good.
Well, forms are, I think, an extremely important part of modern culture, of 21st century society. It's all about forms. I think the digital world has sort of led us into forms. We have to fill out forms to do anything.
And we have to fill out forms, and we have to have lawyers, we have to have tax specialists if we're going to be a US citizen, really, don't we?
Oh my God. The US citizens are the most regulated people on the planet. I don't even think there's a close second. And it's very, very unfortunate. And this is just sort of, I think a lot of it has to do with the way laws are made there. The Internal Revenue Code has not been changed in any significant way for, a half a century. It's like a bad website, where they just keep, tweaking this or tweaking that. Honestly, the whole idea of taxation and the tax code needs to be completely rethought from the bottom up, including getting rid of this, extraterritorial tax regime where the US is imposing, very punitive taxation on American citizens who live outside the United States. Think of it. All other countries of the world, you seize residence for all practical purposes. You're no longer paying tax on worldwide income to that country. United States, nope. You seize residence. Not only are you still subject to worldwide taxation, but we've got a new and more punitive system for you. And what they've started to do over the last decade, and this is very, very interesting, and I think that homeland Americans need to watch what's happening because this is what's in store for them, is the United States tax laws have created a category of what I would call fake income, right? Meaning what they're doing is forcing people to put numbered income on their tax return that they never actually received, right? So if you can imagine, yeah, no, I'm not making this up. So if you can imagine, all right.
You're not making this up.
I never joke about things like this, Ollie. Okay. So for example, in 2017, there are a bunch of Americans who live in other countries. Generally, they have to survive and pay their bills. For example, in Canada, it's very, very common for doctors to run their practices through small business corporations. And it's almost assumed as a principle of tax and financial planning for doctors who will, be doctors for 30 years and then retire. And the reason is that the corporation is a separate legal entity. And if you leave profits in a corporation, The rest of it's going to be taxable at a lower rate, which gives you extra capital to accumulate, retirement stuff. So effectively, they're pensions. But what the U.S. did in 2017, okay, is they passed a law and said, you know what? All that income that you've deferred in these corporations that you've been running, in Canada to run your medical practice, for example, we fully acknowledge this was never taxable under U.S. law before, never. But what we're going to do is we're going to impose a retroactive tax going back to 1986 on all of those earnings that were never taxed. That's exactly what they did. So now, but this is inside the corporation saying retroactively, you, the individual, have to pay tax personally on income earned by the corporation that you never received. Are you with me?
Yeah, I love the terminology retroactively. That's just
the U.S. loves retroactive tax. That is the American way. But now let's put this in the context of somebody is about ready to retire. And I think I may have used this example. I mean, it's an example I often use, but there are many examples of, a doctor who's just retired. He's around 65, whatever. He's got maybe $2 or $3 million in his corporation. Now, that is not a lot of capital to live on, for a lot of years.
No.
But the point is that all of us, he's been filing his taxes all these years. And therefore the IRS knows that he has the $3 million in the corporation because that's part of the information. How much money do you have that hasn't been taxed? What do you have? So they put this tax on, which is really 17.54% of the retained earnings. Now to get that out, now how do you pay that, by the way? You just retired. Where do you get the money? So you've just been given and this is a small time example. You've just been given a $350,000 tax bill. Yeah. Would you like to be given a 300 with no income?
No.
To pay it? That's exactly what happened. Now, I don't think that stuff is justifiable in any case, but obviously if you're a homeland American, it operates differently from if you're an American abroad and all your assets are outside the United States.
That's terrible though. Fake income on all your assets outside the United States. I mean,
that's right. That's right. Think of it. Fake income. It's as an American, you're so privileged. It's the American way. You are so privileged. And you know what? There's good news and bad news. We are going to give you some income that you never had.
Yeah.
But the bad news is we're going to hit you with a big tax on it.
I mean, it is an interesting system. And it's also an interesting system, because even if you renounce your US citizenship, you don't have to give up your Social Security. Is that right?
Well, it's absolutely the case. The whole, I said earlier that, there's a lot of levels of taxation in the United States, and they need to be looked at separately. Now, Social Security is governed by a different set of laws. It has nothing whatsoever to do with citizenship. It has to do with having paid in to Social Security. Sometimes this can be affected by these totalization agreements with other countries. But as a general principle, there is nothing about renouncing US citizenship that means that you would cease getting your Social Security in the United States. And that's important for people to know. But what's also important for people to know is that when you renounce US citizenship, you transition from being a citizen to a non-resident alien. And if you're a non-resident alien, US Social Security is US source income paid to a non-resident alien, so it's taxed differently. You can end up paying higher taxation on that. And this is something that, when people are considering renunciation, it's important that they actually begin by looking at their assets, looking at their income streams and saying, if I renounce US citizenship, how will I be taxed by the United States on those income streams? I'll give you a real example. I helped somebody renounce a couple of years ago. Person was getting US Social Security after renunciation. Now that meant, of course, that no tax was being deducted from it. After renunciation, so the Social Security Administration, of course, learned of this. I mean, they re-ask these questions every few years. And they sent them a letter saying, well, we understand that you're no longer a US citizen. The good news is you still get your Social Security. The bad news is, as a non-resident alien, we're going to withhold 30% of it.
Yeah, living the American dream, isn't it? You know.
You like forms, if you like paying lawyers and accountants, and if you like being under constant threat of penalty, then I would say US citizenship is absolutely for you. In fact, I don't think there's anything better. But if you don't like that kind of stuff, you might reevaluate your citizenship status.
I don't think a lot of people do like that kind of stuff, you know, from having done some research over the last week and realizing that people really want to run away, don't they, and hide away from the American dream.
No,
So
it's terrifying for people. It's terrifying. I mean, we go back to the example of the guy in the Balkans. He's not renouncing for any reason other than just terror. That's it. Imagine being just frightened out of your citizenship.
it's crazy. It's, as you said, it becomes the American nightmare.
US citizens outside the United States, not for all of them, but for a lot of them, they would agree that US citizenship is nothing but a nightmare.
I can understand why people, you know, I've spoken to a couple of people who think twice about renouncing their citizenship.
And nobody wants to renounce it. It's the requirement of the forms coupled with the inability to be able to file the forms themselves. I mean, no normal individual could file a form 3520 or an 8621 or, oh my God, a 5471. Are you kidding me? I mean, that could be like, 10 pages of a, you couldn't even begin to understand it.
I don't know what you're talking about.
Basically, it would be very easy for an American citizen to have all those forms in their life. No problem, just from doing normal stuff like running a small business,
Right.
Or they, there's a general sense that a number of, for example, an ISA, okay, which you would know in the UK.
Yeah.
So that's an example where, as I understand it properly, that the income earned in the ISA is not taxable in the UK, right?
No.
But it is taxable on a US return. Okay, so we have that. Now that in itself, I don't think is a deal breaker. But then the issue is, well, what is it from a US point of view, right? How should it be characterized? Now, there are a lot of people who treat them as trusts. I don't share that view, by the way, but there are plenty of people who treat them as trusts under US law. Well, if they're trusts because they're not in the US, then they're a foreign trust. And if they're a foreign trust, then they're subject to this form, all these regulatory forms is 3520. And if you got a 3520, then you're going to have what's called a 3520A that should go along with it. And by the way, these have different filing dates, okay, due dates, all right. And last year, the IRS went on a penalty binge and, thousands of people who were trying to comply with the law, filing these forms, were assessed $10,000 penalties for reasons they don't even understand.
That is quite mad, isn't it? That takes form filling to a whole new level.
Well, they're not forms. This is the point. They cannot be understood by normal people. It is impossible. You need professional help to fill out the forms. And another thing I would add to this is that there's also a threshold question of whether the forms are even required. And you need a certain level of competence on the part of your tax advisor to be able to discern whether it meets the requirements to fill out the form at all. And the last thing you want to do, which a lot of them do, is say, well, I don't know, I think we'll be safe and fill out the form. I mean, you fill out the form, all you're doing is inviting a penalty. So, it's a very serious problem. I mean, I know people who renounced specifically because of, some of these forms, that they were just, too scared of getting penalties. Can you imagine renouncing your citizenship because of a certain form you can't understand? I mean, that's how bad it's gotten.
If you don't understand it, you don't know. And then you're so petrified because of the situation of being taxed. And, I suppose people think they're going to be locked away, don't they, for not paying their taxes?
Well, the people we're talking about are not going to be locked away. But, they do lock certain people away for, form violations, essentially, or they impose incredibly draconian penalties, particularly for these FBAR, these foreign bank account reports, where they can, fine them for something like 50% of the value of the account, this sort of thing. Now, so far, these types of things have been brought against people who were clearly in the United States and using non-U.S. accounts to hide assets, et cetera. But That's an example of, how difficult it is. And, people seem to think that the law of FBAR, you could look it up or something. You can't look it up because here's what the statute says. Okay. I mean, this is actually a critic of mine would say that's an exaggeration. I'm just using fewer words. It's not an exaggeration. What the statute says is this. We're going to let U.S. Treasury make up a form and make up a set of rules for who has to report their non-U.S. bank accounts. And we're delegating that to them, and then they're going to do it, and they're going to become the judge, jury, and executioner. So most people can't even find the section of the law that even authorizes this stuff,
right?
Let alone the regulations. And then if you learn about FBAR, for example, I mean, you can read on this stuff for weeks online, and you get all kinds of different opinions on what's meant by willfulness and stuff. And like, why do you want to be part of this? I mean, why should, an American citizen who happens to live in the UK, has lived there for 50 years, why should they be required to report their local bank account to US financial crimes?
No, it really doesn't make sense. It then becomes, a crime form, doesn't it? Not
Form crimes. These are the most egregious crimes against the United States of America. I mean, theoretically, you can get a larger penalty and possibly a jail sentence for a greater penalty for failing to file a foreign bank account report than even for killing somebody with your car.
That is just astounding.
It is astounding.
It takes the whole term crime to a whole new level, form crimes. If people do not understand how to fill them in or what it requires, I mean, that seems to me that it's almost a ridiculous situation.
Well, it is a ridiculous situation. Now, to be clear, the penalties are levied against, people who, at least so far, people who clearly have been omitting reporting, in conjunction with omitting income for tax purposes, et cetera, et cetera. And, that's one issue. And I think it's a mistake to conflate those people with the millions of Americans abroad who are subject to these forms, who should not be subject to these forms. But the drumbeat, okay, that comes from the US government, the drumbeat, which is reinforced by the tax compliance industry generally, is that, you can and possibly will be assessed massive penalties, for basically foot faults or jaywalking in relation to these issues. Now, I will say that the vast majority of people, 95%, are not subjected to penalties. Okay, that is the reality. But, that realization requires calm, deliberate, rational thought and the willingness to accept that statement from somebody you trust. The problem is that for American citizens abroad, the relationship with the US government has gotten so bad. And, there's such a degree of distrust and fearfulness that a lot of them have trouble relaxing with that idea that, no, these penalties are not for you, sort of thing. But it's the uncertainty. And people are being, they're basically being forced out of their citizenship. People are not renouncing US citizenship because they don't want to be US citizens. They are renouncing US citizenship because they can't comply with the requirements and live any kind of sort of normal life. And the absurdity of it is the ones who are renouncing are the ones who try to comply. The ones who never file, they're US citizens for life. Why should they renounce? They haven't filed anything. How can they get a penalty?
Right. So, I mean, then there must be Americans living in different countries that have never filed before.
Well, there's no question that there are lots of them. The IRS, itself makes this clear in the, the commentary and the instructions for the, the September 2019 relief procedures, where they make it very, very clear that, for Americans who have not filed US tax returns, the same largely at accidentals, they've essentially acknowledged that they have institutionalized a process, for them to be able to file. There's also this, this streamlined compliance thing has been going on for years, which, is also an acknowledgement from, the IRS that, There are all kinds of Americans abroad who have not filed because, for whatever reason, largely because they didn't know about it.
Yeah.
So, there's absolutely no doubt. I mean, this is not like telling tales out of school. This is just looking at what the IRS says.
Yeah. So, as you said, it's really quite sad in a way, isn't it? That, some Americans have to renounce their citizenship when actually they have been, as you said, filling out the forms, doing the reporting, doing the whole thing. And, why should they have to do that, really?
Absolutely. The harder they try to obey the U.S. laws and comply with the U.S. regulatory regime, the more certain it is they're going to have to renounce. I mean, it's
No.
madness. It's madness. Now, here's the thing. The good news is this, is that most people don't understand this. They don't realize the extent of it. And I mean, if I didn't have the credibility of being on your podcast here, they probably think, no, he's making it up.
Right.
In fact, I once wrote on Quora an answer where I included this, and a number of people said, no, you're making it up. You're lying. These are people in the United States, of course, right? But I think it's so outrageous. It's like, the more outrageous it is, maybe the principle is the less likely people are to believe. I don't know, but they don't believe that this is what it is, but this is exactly what it is. And who gets hurt by this? The people who go to high-end fancy tax advisors who explain to them what the law is and why they have to turn over their life savings to the IRS.
I mean, it's a serious issue. There are people that are living in so much fear out there. And, it needs to be stopped. It needs to be sorted out into some sort of proper context where people aren't afraid for their lives or afraid of, being an American citizen. And it really is, as you said, a human rights issue. Why should people be living under this sort of pressure in life?
It's a very serious problem. People are being forced out of their citizenship.
Anyway, John, thank you for coming on to For the Now again today and talking to me about renouncing your citizenship or not renouncing your citizenship, as the case may be. And I really do hope to all those listening out there that this has been very useful.
Well, I'm sure it's been enlightening, at least. Yeah. And my pleasure. And thank you for having me on your show again. I enjoy speaking with you.
This is a For the Now media production.